Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we are diving deep into a report from UnitedHealth Group. It involves notes, indentures and agreements. Sounds like a snooze fest, maybe, but stick around because we're going to uncover what this actually means for the company and potentially for you. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, and come hang out with other corporate decoders. Essentially, UnitedHealth is telling the SEC about a big fundraising effort involving billions of dollars tied to bonds. They are borrowing a lot of money, so let's see why. First things first, the date of this report is June 17, 2025. This is an 8K filing, which means it's reporting a significant event. In this case, it's about selling debt, specifically notes. The company we are talking about is, of course, UnitedHealth Group, a massive player in the health insurance and healthcare services industry. They are headquartered in Eden Prairie, Minnesota. This section is just standard legal boilerplate, basically confirming they aren't using this filing for anything beyond what it says. It's like saying, we promise we're not trying to trick you. Here's where the meat of the report begins. UnitedHealth announced on June 17, 2025, they agreed to sell a bunch of notes, sort of like corporate IOUs. These notes have different interest rates and due dates. Specifically, they're selling 4 different types of notes. The first set is due in 2028, worth $500 million. The interest rate is 4.65%. Third, there's a set due in 2031 for $750 million at an interest rate of 4.65%. Third, there's a set due in 2031 for $750 million at an interest rate of 5.95%. All these were made possible through agreements with big financial players like Bova Securities, Barclays, Citigroup and JP5, Valford Securities, Barclays, Citigroup and JP Morgan. Think of these firms as the middlemen helping UnitedHealth borrow this money. These notes were officially issued on June 20, 2025, following the rules laid out in what's called an indenture, kind of a contract with US Bank Trust Company who acts as a trustee. These notes are registered under the Securities Act, meaning UnitedHealth followed the rules to offer these investments to the public. The company is filing this report to make all the details available a legal requirement when selling securities. This is where things get interesting, where we see the actual agreements and legal opinions tied to the notes. It's like providing all the backup documentation for this financial move. Exhibit 1.1 is the underwriting agreement. This is the contract outlining who's responsible for selling the notes and how it's going to happen. Let's scroll there. It is an agreement between UnitedHealth and Bova Securities, Barclays, Citigroup and JP Morgan. Exhibit 1.2, the pricing agreement, likely specifies the exact prices and terms at which the notes will be sold. Exhibits 4.1 through 4.4 list the officer's certificates and company orders, detailing each set of notes including the specifics for the 4.40% notes, the 4.950% notes relating to their specific dates and interest rates. Exhibit 5.1 provides a legal opinion confirming that these notes are legally sound. It is from the law firm Hogan Lovells US LL. So what does this all mean? Well, UnitedHealth is raising a significant amount of capital, $3 billion to be exact, by selling these notes. They're essentially borrowing money from investors who will get paid back with interest over the coming years and decades. Why might they do this? Companies often borrow money for various reasons. It could be to fund acquisitions like buying other companies, to invest in new projects, to refinance existing debt, or simply to have more cash on hand for operations. We would have to dive into the 10Q to figure that out. What's the risk? For UnitedHealth, taking on more debt means they have larger interest payments to make. If their business slows down, these payments could become a strain. For investors, there's always a risk that UnitedHealth could struggle financially and not be able to repay the notes, although given their size and stability, that risk is relatively low. Now, let's step back and think about what this means for UnitedHealth. They're a massive company in a growing industry, but they operate in a complex and heavily regulated environment as part of the general healthcare market. Borrowing $3 billion suggests they see opportunities for growth or need to manage their finances strategically. The interest rates they're paying on these notes are relatively low, indicating that investors see them as a safe bet. However, adding more debt to their balance sheet does increase their financial risk a little bit. Overall, this move seems like a pretty standard financial operation for a company of UnitedHealth's size. It doesn't necessarily signal any major problems or dramatic shifts in strategy, but it's a good reminder to keep an eye on how they're managing their debt and investing in future growth. Alright, that's our breakdown of UnitedHealth's latest debt offering. What's your take on this fundraising and what implications it might entail for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more corporate deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.